Hello, and a massive hello to everybody. Hope we're all having a great time, great weekend. This is 50 pips rocking and rolling. 2nd of August, 2015. Not making any trade calls or recommendations because you and only you are responsible for the trades you may decide to take. And the fact that you're in here means you've read, you understand, you accept all the disclaimers on the blog, understanding that we're just performing some technical analysis and learning context for educational purposes only. So I hope everybody's getting rested, everybody's getting interest ready for what should be a pretty interesting week ahead. Again, we had some decent moves into the end of the week, month-end flows, some thin volumes here and there, and some wheeling and dealing. But keep in mind that it's a fairly interesting week. So I mean, going into Monday, we got a bank holiday in Canada and in Australia. So it's really going to be down to some China data, and then we've got all those light PMIs coming out of Europe, and then we have the UK PMI is going to be very, very interesting, some light US data, and the ISM PMI out of the US. So that's going to kick us off pretty much into the beginning of the week. Then heads up, because not only do we have this China data out, but we've got a lot of stuff out of Australia this week, right? We've got retail sales, we got trade balance, we got rate decision. So clearly Tuesday, the main focus is going to be on the RBA and on the Aussie. We got construction PMI out of the UK, and we got that another milk auction, so the GDT price index out of New Zealand, heading into unemployment data from New Zealand. So again, I think it's really interesting seeing the semi-corrections or attempt of corrections we've had, especially on the commodity currencies towards the back end of the week, going into this week with the Canadian data, with the Chinese data, with the RBA, with all the other Australian data, with the Kiwi data. Is going to be fairly interesting. Also, you know, all of the commodity currencies also, because we do have a lot of data out of Canada as well. One thing that, you know, again, I'm not going to go through the whole calendar, but we've got a bunch of data out of all these countries. Very interesting is going to be out of the UK on Thursday. You know, what's going to happen with we got the inflation report, we got the bank rate votes, so everybody's going to see, you know, if people are talking about hiking rates, you know, how to price that in. So everybody's probably, I'd guess the majority of people are expecting to see GPB across the board catch a bid on Thursday when those are published. So we'll have to wait and see what happens there. And then on Friday, again, we got more stuff out of the RBA. We got a BOJ press conference, so we're going to have Karuta on the dance floor, and a whole slew of CAD and US data with the non-farm. So again, anybody thinking that, you know, August is dead and we've got the summer months, I think the first week of August is potentially going to be extremely interesting. The way I look at it, basically, this is going to be a very active week with a lot of opportunities. Then I would expect the week after to be a bit, you know, 10th to 17th, that whole week to be a bit quieter, and then the week afterwards for things to pick up because we got a lot more data coming out, and also we got that 20th of August deadline for Greece. Now, looking at charts, what's going on? You know, if you look at cable, what we said, there's a couple of interesting things to keep an eye out for. So, you know, we talked about cable, saying that we could probably make a case for the upside and the downside here. Probably a lot is related to wheeling and dealing on the dollar. It's all about US data, right? But here we talked about how we thought there was a lot of chopping inside this range. There was not an awful lot of edge unless we made a decisive break. So if you go down, you know, if you look at this, let's get back on a daily here. You know, you can see how choppy this has been inside these ranges, and we've had a lot of sellers that have really tried to cap it and buyers supporting. So really it's going nowhere. So I suspect it's, you know, structurally we still expect the BOE to raise rates further, so GPB across the board to continue to catch a bit of a bid tone. For a long time we prefer to express that view by being short Euro GPB than by being long GPB USD. So right here it looks like it wants to break higher, but you know, all the dollar strength is kind of keeping a lid on it. So we'll have to see what happens next week. But all I would say is, really, unless we start to see daily closes below the 55s, right? Or unless we start to see daily closes back above those 58s, I expect this to be a fairly wide chop area, and I think it's going to be very difficult to see this really get some traction to the upside or the downside unless we break outside of those ranges, right? So, but it's going to be a very interesting week because data should help us. The other thing, which I think is probably the most interesting, is, you know, all the data that's going to be coming out of Australia and the RBA hence that means Australian dollar. So if we look at the Australian dollar, so we've continued to see a lot of pressure on, no big surprise, and we talked about those two big pivotal levels, which were the 75 and the 74 mark, right? Now, we saw this chopping around inside this range, but it clearly managed to use previous support as resistance and continued down. Now, this is a kind of pattern, the kind of action that we seriously like, right? Or that seriously gets us interested, because we see that price is pressing these lows fairly aggressively, and then we get that final break, right? Takes out that level, so probably OPEX level 72.50. That's the level that hadn't been touched for a while, probably since 209, right? So it's fairly rare that, especially in month-end flows and a choppy kind of market, that level doesn't get taken out, right? It's almost too good to be true for that level not to get taken out. But what is important is not necessarily if it gets taken out or not, is does it attract new sellers at lows? Does it get Momo or not, right? So the way what this is pointing to is that we've had a move back down, took out some weak stops, failure to attract new sellers at lows, and you'd expect this to rotate back into the 74s. Now, the only caveat I'd say, it was end of month flows and it could be a bit choppy. So what you want to watch is to see how we trade early now in Monday trade, right? Should we take another stab at those lows and press below the 72.50? Then probably hold very, very heavy. But unless we get back below that quick, then you would expect into possibly, into that Tuesday when we have all that retail sales, we got the cash rate and everything, you would expect to see some more correction here. And what is the most natural level is probably for this to try and take more stops and drift back up into the 74. At what point then, when we go into the RBA, into all the data, if we get up there, that's going to be the next pivotal level. And that would mean on any pop to the upside, don't get excited unless we clear the 75s, right? If we can't hold below the 74s, still very aggressive for a move right back down. But if we go back up and clear the 75s, then don't be surprised to see this take a stab all the way into the 76s, into that previous big support zone. So I think here, especially if you're looking for a kind of asymmetric kind of risk kind of trade here, it makes sense to try and look for some more covering or some more move to the upside. But I think clearly, because of the failure to track new sellers at lows, especially any failure to get more traction below the 72.50s, any failure to get back below there are a lot of interesting places to look for the upside, right? And that's a very similar kind of pattern you see on the Kiwi across the board. CAD is going to be interesting to see. CAD, we've talked about this a lot, and we've seen some fairly nice action, a lot of opportunities to trade this. But I think the only thing that really counts here, and we talked about this, was these highs, right? And what's happening is it going to get traction above those highs or not, right? That's the big question. Not is it going to wheel and deal, is it going to try and cause pain above that at that 31? That's fairly I think nobody's surprised about that. The big question is, are we going to get traction? Are we going to attract new buyers above that 31 and try and take a stab much higher? A lot of people are talking about the 135 level. A lot of people are talking about the 140 level. You can take your pick here, right? We're not into, but it looks like clearly there's a lot of room. The only thing I would caution is, and there are trades we're not too hot on, but I would caution about trying to get aggressively long at highs. Let this settle, wait for all the data to come out. And this is going to be the bull bear line for the week, right? It's really all about that number. As long as we hold above the 131, this will continue to hold a very aggressive bid tone likely. If we can't hold above that, well, then most likely, it wouldn't be surprising to see some kind of a decent correction, right? What point would you be looking at to that correction? We don't know how it's going to fail, but, I would not be surprised if we fail to see it come back into the 126, 125 levels, potentially 400 to 600 pips to the downside, and it would still be holding. Ahead of that, it'll have to deal. Again, we've looked at this last week with that previous resistance acting as support. But I would say bull bear line for the week, 131s. To the downside, you got two big levels to focus on. And to the upside, you know, people will be talking about move trying to take a stab at those 135s, 134s, but 135 is probably the big level. So in terms of on the broader chart, big chop ranges, you know, 135, 131, 128, something like that. That's something definitely be looking for. If you look at the DAX, you know, very nice action. We talked about the fact here that we would expect this to come back, fill the gap. Got a nice little bid here, you know, and it's trying to rally off this zone. Clearly, there'll be a lot of people trying to look to sell the 50 back on any rallies. Here, as far as we're concerned, it's still a very big chop range inside this level. You see here on the daily, we're stuck between those two moving averages, the 100 and the 200. So to us, that means, you know, not an awful lot of direction and potentially a lot of choppy trades. So I think you can pretty much make a call for either or. But right here, it looks like it's trying to take a stab higher. You know, what's going to be very interesting is, are the bulls using this mid channel here for a nice little move back, bounce on the gap fill and trying to rip it back up? Or is this a little bounce that is going to find sellers and it's just a little correction and we're still in play on the channel? Right here, it looks like it wants to take a stab at that 100. We'll have to see how the market trades early in the week. If you look at the S&P, right, we talked about that that 2100 being a bit of a magnet zone and it being pivotal. And you see globally we're stuck there, right? So there's not an awful lot to do as far as I'm concerned in terms of new trades. This is not expensive enough to sell. This is not cheap enough to buy, right? It's looking for that direction around the 2100s. I'll be looking to potentially sell failures at highs, as we've been discussing for all these past weeks, which have proved to be some very, very interesting sell-offs on these negative closes at highs, fairly decent trades. And, you know, maybe tactically be looking to buy some dips. But really, for me to get interested to buy the dip, I need to see this trading much closer to 1900, 1950, or 2000 than anyway here. This is a lot of a very choppy zone. We discussed in past videos why the acceleration to the downside was interesting. But again, if you look at the last videos, there's not an awful lot to report here. Clearly something that a lot of people are going to be looking at and I think are going to be focused on is what's happening on gold. As far as what's happening on gold, you know, we've discussed this, there's not an awful lot to add really, is that we're stuck at this bigger 50 back, right? So if you look at it on the monthly, at this 50 back, and we're kind of looking for direction. Now, we talked about when we started selling off, we said, you know, keep an eye. You'll start to hear a lot of people talk about margin calls. A lot of people are going to start to talk about some funds going bust and liquidating. And that's fairly usual when you start to see these moves in gold. What we said is it was trying to attempt a range shift and trying to attempt an acceleration to the downside. However, there's a lot of choppy action around the 1100. So as far as we're concerned, even though we were not too interested to get short here, even though we see the case for people trying to get aggressively short and play for the break, I think this is a lot of very choppy zone, and I wouldn't be too interested in participating here. But in the same way that it doesn't look like we've put a painful enough candle to the downside for a big reversal, it looks like it's trying to base. But I think the key is, you know, as long as we hold back above that 50 from a daily close, there's a chance for a retracement. But I think that the odds of that happening will increase exponentially if we start to get a daily close back above the 1100, not necessarily above that 50 back, right? And for us to see a lot more selling pressure, I need to start seeing daily closes back below that 50 back. So you see also here all the wicks to the upside and the downside are showing and highlighting a bit of uncertainty and this kind of attempting to base, but it's still looking fairly heavy. We know that gold and silver or crude, they tend to bottom stuff with some kind of ugly patterns, and here really it doesn't look ugly enough. So we'll just have to wait and see what happens. In terms of euro, what's going on in terms of euro? We're getting a lot of choppy action really here, so not an awful lot is happening now. you see how we're stuck inside the zone. And what we said, as long as we get stuck inside the zone, it's going to be very, very difficult to to call it one way or the other. I think what most people are going to be talking about is are going to be talking about that aggressive rally on Friday last week, and this repeated failures here, you know, to hold above the 111 mark. So you have to pay attention to that. But as much as this 1070s was a very interesting level for us to play tactical intraday shorts, I really think, I wouldn't read too much into it, simply because month-end flows, you've got a bit of low liquidity chop, and it's very tricky. And I think anything can move extremely quickly here, but it doesn't necessarily mean that much, right? Actually, look at this, baby. If you go back, you see this candle we put in, kind of like, when was this, back in June, 6th of June, sorry, 29th of June. So we're kind of still chopping around in that range, right? We're still contained inside that big spike day. It just doesn't look like the market is really ready to move. We've got this other candle here, right? And you see we're still kind of stuck inside these bigger range days. We're still stuck, so there's not an awful lot happening. I think we really have to see something more concrete on from Yellen, or in the U.S. data front, or from Greece. I think nobody can deny that pressure is still on. But again, I think the focus here for me is to try and look for tactical intraday plays. As we've talked about before, you have to understand the context. You have to understand what kind of market you're dealing with, right? You don't get a chance to play the market you want. You get a chance to play the market you get, right? So you have to play the hand you've been dealt. You have to deal with that. And what that means is, trying to look for aggressive swing trades in this kind of market, or in this kind of seasonal, is really not, is asking for trouble. You have to understand that this is, even though there are potential breakouts setting up, this kind of market tends to favor, aggressive intraday tradings, tactical trading. The return of the swings will come, but don't set yourself up to be disappointed, right? So let's see what happens into this week. I think there's not an awful lot has happened, but I think the week's going to be really interesting because we got a lot of data coming out. So let's see what happens. I'll post the update, and I'll see all you guys around for London Open, okay? Have an awesome one. Thanks for listening as always. I really appreciate it. Bye-bye.